speakers, I'm very excited to say are top honchos in their respective fields.
So to moderate this session, allow me to introduce a well-known host and an equally popular TV show. So please let's give a hand to Miss Salve Duplito. So Ms. Salve Duplito is actually the resident financial advisor of ANC's On the Money.
Say hi!
Hello, hello.
Hello.
Hello, how are you? Okay, so I'll introduce the speakers and ask them to come up here in front. The first speaker is Marvin Fausto. I think a lot of you know him already because he's always in the news. Can you please sit here, Marvin? Marvin is the founding president of the Fund Managers Association of the Philippines. Excuse me. Do I introduce them already or I call them up first? Everybody. Yes, please. I'm so sorry, that was done without much grace, but I hope you will forgive me. Hi, this is Martin Fausto. Can you please give him a round of applause? May I call Mr. Michael Angelo Oiswan, CFA. Let's clap for him, please. And Mr. Ferdinand Antonio Canseco, CFA. Puro pogi kasama. And thank you for being here. Let me introduce our first speaker. Alright. Mr. Marvin is the founding president of the Fund Managers Association of the Philippines and currently sits as board advisor of FNAP, the Trust Officers Association of the Philippines, and the CFA Society Philippines. He was a former governor in the Market Governance Board, representing investors at the Philippine Fixed Income Exchange. He had a long career in the fund management industry, heading the investment teams of City Trust Banking Corporation, PCI Bank, Equitable PCI Bank, and Senior Vice President and Chief Investment Officer of BPO Trust Group, managing more than 700 billion in trust funds. As head of their investment units, he has led all these institutions to be one of the best fund managers in the industry under his watch. I think that deserves another big round of applause. Mr. Fausto graduated from the Ateneo de Manila University with a Bachelor of Science degree in Management Engineering and took MBA units from the same school. He is married to Mary Rose Fausto, the FQ mom and a financial literacy advocate. She's over there. That's what a devoted wife looks like. And they have three sons, Martin, Enrique, where are you? And Anton, all investors since they were in grade school. After working for over 30 years in the fund management industry, he recently took his early retirement, which is very controversial, and is now embarking on a new venture as consultant to COL Financial, the largest online stockbroker in the country, using his expertise to launch the first fund supermarket in the country and trying to fulfill his dream of making investing for everyone. Mr. Fausto is an avid runner. I was going to say that as an adlib because he knows very well how to run away from risks and towards returns. Having run major local and international marathons, with a long career as a fund manager and investor, Mr. Fausto is also known as the marathon investor. So Mr. Fausto has prepared a presentation for us. Q&A. All right. Again, round of applause for Mr. Fausto. All right. Our next speaker, our next member of the board of the panel is Mr. Michael Angelo Oiswan. Mike Oiswan is the CEO of BPI Securities Corporation. He has worked in major financial centers in the world, including in New York, Hong Kong, and Singapore. Before joining BPI Securities Corporation in January 2013, Mike was head of sales for North America at Samsung Securities in New York York and was director for equity sales at Deutsche Bank in Wall Street. He worked at Deutsche Bank for 15 years in various roles, including head of fundamental sales for Asia ex-Japan in Hong Kong and associate director for research at Deutsche Regis Philippines. Let me just add a simple chismis about Mike. It was during this time that he was one of the first people who called out the risks that led to the Asian financial crisis in 1997. Round of applause. Let's try to understand. Very few people know that. He was highly rated Philippine analyst in the 1990s and was among the top salesmen in Asia ex-Japan in 2005. He is a CFA charter holder and holds an MBA from Northwestern University's Kellogg School of Management and the Hong Kong University of Science and Technology. It's a tongue twister, all these people's credentials. He is also an economist. He did his PhD coursework in MA in Economics at UP Diliman and graduated cum laude from the UP School of Economics. Just like Margaret, he also has a sport. Can anyone guess what it is just by looking at it? Bawal karos. You know too much. Alright. Anyone? Mike Oison is also an equestrian. So he also knows how to jump around risks very safely. Another round of applause, please. Mr. Ferdinand Antonio Tansito, CFA, or Toto, did I pronounce that correctly? Toto, is the Senior Executive Vice President and Head of the Financial Market Sector for Metropolitan Bank and Trust Company. He's also the Chairman of Metrobank Bahamas Limited and the Vice Chairman of AXA Philippines. Prior to joining Metrobank in 2007, he was the Treasurer, Head of Global Markets, and co-head of the Wholesale Bank for the Philippines in Standard Chartered Bank. Toto holds a Chartered Financial Analyst designation from the CFA Institute. He earned a Bachelor of Science degree in Electrical Engineering from the University of the Philippines and attended banking and management courses in the said business school, Templeton College, University of Oxford in the UK, and in France. Another round of applause. Now that I've had my practice in tongue twisting, it's time for you to answer difficult questions today. I expect nothing less than a brilliant discussion from three brilliant gentlemen. Alright? I can imagine that just like other emerging markets, most of investors in the Philippines only look at returns and not really at risks. And incumbent in your roles as head of your companies and having had long careers in the finance industry is how to educate ordinary investors about the risk and return profiles of different investment instruments. But before we go to the actual discussion, how do you think, can you just give me your thoughts on how you think people actually discuss risks right now before investors actually buy? I'd like to know about the standards in the industry on how this is done currently. Are people in the finance sector responsible when it comes to selling investment instruments?
Let me try to answer that. Currently, there are a lot of financial products in the market right now, except that, when they talk about financial markets, they always talk about the returns. And it's unfortunate that risk is not really being talked about today. I think I prepared some slides here. There are basically two risks that should be talked about that some salespeople don't really talk about, because you scare the investors if you talk about risk. You talk about returns, then you're trapped. So maybe later I can talk about that.
Maybe we can pull up one of the slides about
so
the
the
two
next
different
slide.
types of risks.
The other slide, the first risk is the financial risk. Financial risk is really the amount of money that you can afford when there's volatility. As you know, this is the first type of risk that all of you will have to think about or consider. And the way, the markets really have risks. Any investment has risk. So if you don't want risk, you put your money in the bank or earn just 1% and work for the rest of your life. But if you want to earn a little bit more, especially for young kids or for the millennials now, think about the risk that you take. And the way to do it is to manage it. In other words, don't shy away from risk, but manage it. In the slides here, the way you manage it is just separate the short term, the medium term, and the long term. That's how you manage it. In other words, there are risks involved, but I guess the way to manage it, you just separate the three. Now you have your short term, medium term, and long term. Now the other risk that it's not usually being talked about is emotional risk. You know the emotional risk, the one that sometimes you feel emotionally charged, especially when the market goes up and down.
That's not related to crushes and first love. Because this is the target group for the first love risk.
Yeah.
Wala. Okay. So this is about the market.
This is about the market. Two different things, financial risk and emotional risk. Financial risk is the amount of money that you can afford. The emotional risk is the feeling that you have that you can afford, especially when the market goes up and down. These are two risks that you consider. Because you might have enough money, but you cannot handle the emotions naman, di ba?
Now taking off from that very nice discussion, Marvin, I'd like to ask Mike. The market has been very volatile lately. And I'd like to go back to my first question and coming off from Marvin's answer. Do the people in the industry discuss these types of risks, the financial risk and the emotional risk, with prospective investors? Because as Marvin said, if you talk about risk, you might scare them away. Are you scared? Guys, are you scared with risks? Are you scared to lose your money? O paano na yan? Hindi na sila mag-invest, Mike. Paano yan?
No, I think I've been very clear about how I approach advising investors. We have to tell this true story of what's going on in the stock market. I mentioned to some reporters earlier this week, for example, that we're not yet out of the woods in terms of the stock market. When I make those statements, I'm like shooting myself in the foot because investors are scared to invest. But the reality is that what is the objective of our business as a stockbroker? We want that investors have confidence in the capital markets. If we lose their trust in us, they will never come back and invest in the stock market. So it is incumbent upon us as brokers to tell investors what the true outlook is. But having said that, we have to educate investors that the situation could actually be temporary. That the Philippines is still in a very, very strong, we see strong fundamentals. But what we are seeing are just exogenous or external factors that at some point are going to go away. And the way I call these, what we're seeing in the stock market, for example, I call it the stock market flash flood. Nung nangyari nung Tuesday, biglang nabaha. This is what we are going through. We're caught off guard in terms of what's happening in China, what's happening in the United States. And therefore, we need to understand what do we need to do. So what we've been telling investors is, basically, these are the risks. There's the downside to the stock market. But if you can manage your downside risk, if you're comfortable with 5 or 6 or 10% downside, you should start buying good quality, high quality companies. So again, we have to manage both the risk outlook as well as the return outlook for the stocks.
Let me move on to Toto. Toto, you've been in the market also for a long, long time, not just in the Philippines, but also in global markets. Can you talk about the different kinds of risk and what do risks look like for the Philippines, Asia, and global markets?
But I think that we are in the midst of massive changes. Massive changes in regulations, massive changes in behavior of companies, massive changes in our economic conditions. Regulations have really come down on our financial industries. And a lot of the things that worked before will no longer work now in the market. A lot of the investment themes that used to work before will no longer work now. One of the things that a lot of people used to make money on is the carry trades or investments in high growth stocks or investment in high leverage stocks. That things might change moving forward. So any investment decision right now should be taken in context with a worldview, with a view of what really is happening and the changes. We cannot look back in history and say, this worked in the past, this will work in the future. We need to do our homework, tap really good advisors, and do our own research to make sure we're comfortable with the risks we're taking. Investing in any instrument, whether it be stocks, bonds, derivatives, is actually the last step in a process that should start with having a worldview. What does the changes now tell me what to do? What's going up and what's going down? And after you make that decision on the big picture, then you pick the instrument, whether to express that worldview to be a stock, a bond, or a derivative. So that, in my sense, is how we should be looking at the risk paradigm in this environment.
What is the emerging worldview, do you think? Because these people who are here listening to you, they have a period in their life where in a couple of years they will be starting to earn money. Hopefully, they will start to invest in the markets. What's the emerging worldview that they will be birthed into? What are they going to see beginning in the first 10 years of their working and investment life?
Well, for one thing, we should look at what has propelled a lot of the economies forward in the past few years. And one of the things that's propelling the Philippines is actually demographics. It is not a lot of things, it's just simply that we have a young, educated, and intelligent workforce that can, if given the chance, compete in a global standard.
Sila yun, di ba?
Sila yun.
Each person in this room.
And the fact that you are here right now indicates your commitment to continue this this legacy. So I think you should give yourself a big hand.
Oh, yeah. Applause for you.
That is what propelled China, that's what propelled Korea, Taiwan in the past, and that's what will propel the Philippines. So if you believe this, then what should you be investing in? You should be investing in those industries, those instruments that will benefit from these changes. Consumer goods in the Philippines, discretionary companies, maybe banks, if I may say that.
Promoting.
So we have to look at these trends, and this is what we should latch on. We should look, if this is happening, then what? It should be like, if this happened in the past, then this is what happened. This is what we need to do to research better and make better investment decisions.
I hope you guys are getting some pointers in what industries and what companies you will buy with your first salary. You said earlier that it's important to look at the past a little bit also, so you understand what's going to happen in the next 10 to 20 years. And I think Marvin has some very nice slides about risks and returns in the last 20 years. Can we pull that up the screen?
I think it's the next slide. No? You're talking about the next one?
Next slide, please.
Yeah, that one. Come on, bring it out. These are different asset classes of mutual funds. You have money market, bond funds, balance funds, and equity funds. If you click it again, you will see the returns. The black ones are the returns of these funds for the past, I think these 5 years, no? So you have only money market, only 1.28%, 6.4 for bond funds, balance funds 11.44, and equity funds 14.88. So this is in the Philippines. These are your average return or compounded annual growth rate returns of mutual funds. Now, if you click it again, I want to show you the risks. So it's not only the returns that is very important to see. No? The red ones are the risks, meaning the standard deviation of the returns or the volatility of the returns of these funds. You can see the one on the money market is very low risk, for 0.52 only, all the way up to the equity funds, you have 15.39, so the highest risk. So for people like the one in the audience, no? They're the ones who are looking at high returns and high risk. Maybe you can consider the equity funds because you still have a long way. Toto was mentioning about the demographics. So these are the ones that might be useful for you for your information.
How does it, there's another slide that I wanted you to explain.
The next one.
The
graph, yeah.
The line graph.
Yeah, this one, no? This is the mutual fund return for the past 10 years, from 2005 to 2015. You see there on the right side is 10,000 pesos. Your 10,000 pesos, if you just kept it for 10 years from 2005 to 2015, this is as of July, your money would have grown this way. The lowest one is only money market, very low, very
Net
flat.
of taxes, Dr. Marvin. Net of taxes already.
Net of tax, this is net of tax. The lowest one is very stable, money market, so many didn't return, only up to 12,000. All the way up, you can see the equity funds will give you about 54,875. But what we want to stress here, it doesn't go up on a straight line. I guess high return will give you real high risk. You can see the volatility of that color blue graph. No? So this is the ones that I think we have to be mindful about and remember. No? If you want low return or low risk, you will get low return. But you want high return, you have to get you have to be conscious of the fact that you will get it through high risk as well.
So there's a trade-off. So Marvin is saying, what does it look like for the stock market?
You know, looking at this chart, I don't have a chart here. Do you know a company called DMCI? There's a chart which I
Because
have.
of the bad news?
Not the bad news, not the Torre de Manila, but if you have put your money in DMCI in 2003, you forgot about it, you had 100,000, you woke up in 2013, that 100,000 was worth 28 million. There are certain stocks, yeah, you hear that? 100,000 to 28 million. Same thing with companies like TLDT, even I think it was most of the consumer names, JG Summit, URC. The thing really I think for the stock market is you got to invest for the long term. You have to be a partner of the business, not a trader, especially at your age. It's so difficult to time the market. So I think eventually the strategy I think for investors is, do you know these companies? Do you know who run these companies? And you know, for the Philippines, the question is very simple in terms of where to invest. Who do you trust? Do you trust the Ayalas? Do you trust the C's? Do you trust the Gokways? And if you trust them, just buy these stocks. It's pretty straightforward. The others, they don't have a lot of track record. So I think over time, if there's volatility in the stock market, even Warren Buffett cannot time the stock market, and neither can we. They can always buy high-quality companies.
I was going to ask Mike, wearing the hat, kunwari, estudyante pa lang ako. I look like a student from naman ko. Pwede pa? Pwede pa ba? Okay, pwede pa. Ikaw akin. So, as sabi mo kanina, you've got to be a long-term investor. But you know, sometimes the young people, they're the ones who like to trade. They're the ones who like to play. The young ones. They have a high appetite for risk.
Yes.
And if they want to do that, how can they manage the risks?
So you manage the risk. First of all, what do you invest? Huh? I mean, this is something you have to keep in mind. It has to be money you are willing to lose if you're going to trade. Tuition fee.
Pakiulit. Let's repeat that.
Let me just repeat that one. If you're going to be a trader, okay, this has to be, the money you have to trade should be what we call excess cash. Hindi yung pambili ng gatas sa iyong mga kapatid or pambayad ng hospital sa iyong mga magulang. Okay? This has to be money.
Tuition money, eh?
Well, tuition, because you might lose it if you're going to trade. Okay? But the way you mitigate risk, I think, when you're trading, is to really understand what the company you are trading. I.e., you start with fundamentals, then you end up with the technical. Start with a company, understand the company, and confirm that with the technical charts. In other words, if your reading of the technical charts is wrong, at least you'll end up with a high-quality company. And that is the most important advice I can give you. And for some of you here, you're still young, but I know some investors who invested in pangkasal, nalugi, na-postpone ang kasal. And that's a true story. So please avoid that situation.
Alright, moving on to maybe let's talk about the different investment instruments that are available right now. I mean, we include all the other Asian instruments because not all of these instruments are available in the Philippine market. And because with ASEAN integration, very soon, these people here might have access to other instruments. How would you rate their risks and return levels? Which ones are the least risky? Which ones are the most risky or riskiest? Which ones are the ones that can provide the highest possible returns? So that our future investors will have an idea. How are they going to allocate their portfolio and manage their risks with all the different risk and return profiles? Students, how's the language so far? Can we understand? Do this if you can. If not, do this. Yan ang gusto ko pag nakausap ko mga finance people. I wish I was an economics graduate or finance graduate, pero nagkukunwari lang po ako. Toto, can you please discuss?
The riskiest investment is the investment you do not understand. Well, whatever it is.
Paulit. Napaka-importante niyan. The riskiest.
Pinakamapanganib.
Ang pinakamapanganib na investment ay yung hindi mo naiintindihan.
You have to know exactly what you're investing in. Whether they say, low risk to, by tomorrow you get your money and sure bet. Kahit na ano sabihin nila, if you do not understand how it's making money, where it's getting its cash flow, where it's getting its return, that is the most dangerous investment. So what you need to do when offered these instruments is really find out what is this all about. Well, how is it making its money? Does that make sense? Now it's giving this return. There's no such thing as high return, low risk. And that's something that you have to remember all the time. So what are the most, I would say the best investments for people starting out? Things you understand, the Philippine money market, the Philippine bond market, the Philippine stock market. When you start understanding that, kung kabisado yun na yun, then you start venturing out. If you cannot make money on Philippine stocks, I can assure you cannot make money on US stocks. So the discipline is portable. You go out when you think that it is exhausted the opportunities in your local market. So that I would advise most people to follow.
Thank you very much. Any thoughts, Marvin?
I agree with Toto. Get into investments that you understand. Basically, the second law. Get into a business or a partnership that you understand. The riskiest is the one you don't really understand. But in terms of understanding the financial instruments I showed earlier, the least risk is really your money market, the very short-term investments. And the riskiest assets is the equities market. But studies have shown that if you hold equities for the long term, that's the best asset class. That's the best performing asset that you can invest in, especially if you have a lot of time to invest.
How about real estate? Real estate.
My personal view on real
I
estate.
threw a curveball. These people are all financial markets.
People ask me whether it's better to buy physical real estate versus stocks. My honest view is buy stocks. They're more liquid. Madaling magbenta ng stocks. Ang hirap magbenta ng condominium. Ililista mo pa sa sulit.com. Maghahanap ka pa ng broker. Ang hirap. I tried selling once, condominium. 1 year. Stock market, press go, sell. Tapos. And you will see that over time, many of the property companies in the Philippines have actually outperformed the underlying physical asset. So that's something to keep in mind. And that's why sometimes there's always a debate about that, like all of us. Um, should I start a business? Or should I just buy a company? My answer is, makiangkas ka na lang sa negosyo ng ibang tao. Buy good, high-quality companies. Because when they do well, you do well. And if you don't like the management, you can just sell the stock. But if you invest in a restaurant, for example, ang hirap magbenta ng oven. Ang hirap magbenta ng mga upuan. That's why liquidity is so important in choosing the right asset class. How easy is it to get rid of that particular asset?
Gentlemen, just jump in. Mahirap pa pati makipag-break dun sa business partner mo.
Mahirap
Ex na
away.
kayo.
Yeah, away.
Mahirap makipag-away sa business partner. Although, of course, if it's your passion, you need to go into entrepreneurship. Go into it because it's your passion.
Yes.
Not just because you want to earn money.
Ang good thing is stocks, if you sell, walang personalan. Benta lang.
Si Mike lang magagalit sa inyo kasi hindi sinunod yung advice. Oh, yeah. Buy or sell, you get commissions. Alright, how about investments in foreign currencies? That's starting to get a lot of attention.
Same thing for anybody with the passion and the time to research. Foreign currency can be a good investment, but mind you, you don't go there unprepared. Be prepared for long nights, looking at financial numbers, reading a lot of reports. That's why I am an advocate, especially for a new investor, to go to funds that are exposed to these asset classes rather than trying to do it yourself. It might be a good opportunity to practice a little, but let not that be your main investment sources. Eventually, when you have you have a portfolio, then you could put foreign currency as part of your portfolio. So I think one thing we have to emphasize is any investment decision should be taken in light of your portfolio. How much are you exposing to this asset class, and how much are you willing to risk in this market view? So hindi pwedeng 100% stocks ako. I'm sorry, but
I agree with you. And
you have to keep your hospital money in something like a money market fund, your grocery money in maybe a time deposit, and your wedding money maybe in a bond fund.
So asset allocation is one of the things, it's one of the ways that you manage that risk as well. It's one of the most important things actually. Just one round of questions, gentlemen. How important is it for individual investors as well as for the economy that investors know their risks and returns? I remember there was a time when UITFs were first introduced, and I don't know what year that was, but I think it was Paeng Buenaventura was the BSP president, governor at that time. And it was very difficult because even the people who were selling these instruments were not, I think at that time, very well trained. And people did not understand the risks inherent in these instruments. And the market just one day, it crashed. And people were left with no idea what happened. Can you discuss how important is it for individual investors as well as for the economy that investors know the risks and returns of different investment instruments?
Yes, it's very important, especially if you're just starting, the newbies. Very important for you to have the information available.
Right.
Yeah, I can talk about that now because I partnered with COL Financial and we're launching the first one supermarket in the country. This is what I'd like to do is to tell everyone that it's going to be available online. Or it is available online. The information on the performances of the fund, the risk of the fund, just go through the...
May I say, for the first time in history.
Yeah, for the first time, the next slide, you'll see we launched this in July, COL Fund Source. It's actually the first one supermarket in the country, where you will have, just go on with the slide, the different risk parameters that we set up. Now, the mutual funds will have risk levels. We started this mutual fund risk rating analysis where you have one will be the conservative, and the number 8 in risk rating will be the most aggressive. So you will be able to see the fund that you're getting into, what type of risk level there is. And then the next slide, in the site you will also see the different tools that is going to be available, that is available in COL regarding the different returns, the standard deviation, the Sharpe ratio, the risk rating. Just keep on clicking that. And then you will see this information that's very important to you. Now, once you understand this, it really affects the way you make your decisions. And when you make the right decisions for collective investments, then it will more or less help the country as well. The fund managers will be able to manage it well, the investors will be able to handle their money well, and then it will help develop the capital markets as well as the country.
Alright, but it's a bit controversial in the sense that do the other fund managers in all of these companies, how are you talking to them during cocktails? And hey, you're aggressive, dude. Diba? What's the reaction so far in the industry?
The industry is they're very open to it because information and education is really important, especially for the Filipinos who are not really very investment savvy. The penetration of investment now is less than 1%, and meaning only less than 1% that invest in the stock market. So because of the information, the lack of information, the lack of financial literacy, and more when we're talking to the fund managers, let's try to help as many people, educate as many people, and give them the information to empower them so that they can invest wisely.
Alright, now before we move on to the Q&A, I hope you guys have some questions to ask because time is up. Alright, let me close with this thought. Earlier when we were talking about investing in something that you understand, I was reminded of a TV show where they were talking about Aman Futures and all of these people in Pagadian. Lines and lines of farmers and fishermen invested their money in the underlying instrument was supposed to be commodities trading, right? That was Aman Future. That was billions of Filipino investors' money placed in something that they didn't understand. The only thing that they thought of was that it's guaranteed return because I have a post-dated check. So you see, Filipinos at this point are still not educated when it comes to risks and returns, and sometimes that can really have massive implications on individual wealth and on the economy as well. There are a lot of scams coming up right now. The companies that the Securities and Exchange Commission are investigating, and unfortunately, from the feedback that we're getting from our viewers on the money, okay, get this. A lot of the investors are students. Yes, we've been getting a lot of emails from students who are putting their money in companies that are masquerading as multi-level marketing companies or forex trading companies, but they don't really understand the risks and returns of these investment companies. So these guys have talked to you about the trade-offs of risks and returns and educated us about the different trends right now in the global and local markets, and have told us about what can happen to your money if you let it sleep for 20 years. Do you like that? Do you want to grow your money? Well, then grow your money in a safe way. Thank you very much for listening. We don't have time for Q&A anymore, but I hope you had a good